Welcome to today's show, and it is a show. And apologies, first of all, Pete's not on because he's travelling around the country. He was in London, then up to Birmingham. Saw you, Andy, actually, didn't he? Went up and saw you. And then he went across to Manchester, then he's going across to Nottingham in his Ford Anglia. So he's putting some miles on. And so delighted to say we've got Andy Butts here with us. Darren, obviously, because you are the mortgage expert, there's not much going on mortgages, but I'm sure you can probably find something to talk about.
Well, sure I can.
And Elliot, of course, from RPA Group, regular visitor to the show. So thank you, Elliot. I'm going to go straight away and start with Andy, actually, because I just want to explain Andy and Centric. It was well covered in the press over the last few weeks that our association, Holborn and with Centric, and Centric are going to be helping the letting and the management. And what our aim is to do is to join all the pieces of string for clients who are buying, wherever they're buying, together. The legals, the letting, the management, the mortgage, RPA, whoever it may be. So it's seamless. So that's our ambition. Andy, tell us a little bit about Centric and what you can do to help our clients and wealth managers.
Yeah, thank you, Chris. Thanks for the explanation. I don't think I could have done it better myself.
I'm prepared.
Centric, we've been operational since 2005, so we've been in Birmingham for a good stint. We do everything that is residential property, so we do letting, sales, new homes, land. We've got a huge block management or estate management department, and a combination of around 20,000 units across all those disciplines that we manage across block management and rentals. And then also to cap that off, we've also got a commercial department as well. So as Chris said, the ambition here is to kind of join all the dots and add a bit of structure to the sales process and also the journey for the investor. So if you can imagine, the investor obviously on day one reserves the property. What we'll do then is help hold their hand through that whole journey. So from completing reservation forms through all the solicitors and the DD process, right the way through to advising them on the rental and management once they've completed on the property. And we can do that anywhere in the UK. We can look after their rental asset for them and ultimately treat it like an asset to make sure that it is performing at all times, that it's achieving the maximum value, it's got the right level of tenants in, and also they're fully protected. So they've got the right insurance in place, the right licenses, and all of their compliance is up to date. And we're also helping in the early stages of onboarding these developments as well, to give you guys some clarity and some confidence that the developments that are coming to the table, such as the one today through Elliot and RPA, have the right deposit structures, have the right DD, have the right funding in place, so that journey is seamless and all the way through.
Andy, a couple of questions already come in. One from Linda. Let me just get this up on the screen. Please send your questions in as we're going on. Can they help with short-term lettings?
We don't operate ourselves at the moment with short-term lets, but we do have a number of contacts and professional links where we can introduce you to. So yes. Okay,
and of course Elliot does as well. We're going on to speak about the new project. Another question that has just come in from somebody saying, do you operate all over England, all over Great Britain?
Yes.
If people have got existing properties, maybe with different managing agents, are you able to assist them?
Absolutely, that's part of the process. That if we're introduced to a customer or a client, then we will actually try and internalize all of their assets for them. So there's one-stop shop. So we can, we're in Birmingham, but we've got stock in Manchester, Liverpool, Leeds, London, and we can do that seamlessly. There's only one point of contact for that customer then.
Thanks very much. I'm sure there'll be more questions coming in as we go along. And I thought next, Darren, because I always leave you till last. Darren, what's going on in the mortgage market? Are we down at 3.5% now for international investors?
I wish we were, Chris. Not quite, but actually there is some good news. So the way that the mortgages are in the UK, that the UK lenders are slowly reducing their rates down. So we've had some calls with a couple of the big expat international buyer lenders, and they're looking to follow suit in the next couple of weeks because they can see what they call the swap rates are coming down. So they've that sort of set the precedent. So those ones will slowly come down again, which is great news. So yeah, it's interesting to see that like buses in the UK, when one lender does it, everyone starts doing it. So yeah, we've seen a bit of a flurry with all the UK ones, but I'm pretty sure the expat stuff will start reducing down again, which is great. And one of the lenders for the expats have started coming back out with new products, and they haven't been in the market for about a year. So they got a little bit twitchy last year, and they've come back into the market, which was one of the lenders that was highly used for new builds, blocks over 10 floors. So that's really exciting as well, which is encouraging.
And when you say new products coming on, am I thinking that means sort of 2, 3, and maybe 5-year fixed rates that people can go for?
Yeah, definitely. The tracker deals are definitely there, but the fixed rates are sort of coming back in 2, 3, and 5. The stress testing on the rentals getting a little bit better, so it makes it a bit easier. I suppose with the tracker deals, the clients and the wealth managers just need to look at whether they feel it's going to be long term, because those tracker deals will also be higher than the fixed rates at the moment. So whether you go for a short term hit with a long term gain, really.
I actually heard your explanation not long ago on people doing two-year fixed, and maybe over a 5-year period, you're going to be paying £9,000 in cost when it comes to remortgaging with a new lender. And sometimes, you know, it's better to bite the bullet and go for 5 years and hold on with no other costs involved.
I had a call with a wealth manager yesterday, and it said exactly the same thing. So by the time we looked at the difference between a 2-year and a 5-year, the 5-year would have saved them some like £4,000 on fees and monthly payments than it was biting the bullet and going for the shorter period of time. So you've got to look at that. That's eating into the client's gain and capital they're going to build. So actually, it doesn't make any sense. But that's part of my job, is to actually look at all that and explain that to the client. Sometimes it can be a little bit factual, but unfortunately, that's part of the job. So that's the bit that we can't make fluffy and pink, so to speak.
No,
and lots of
never
been jumping around, but yeah.
You've never been fluffy and pink, Darren, in my book. By the way, I must tell everyone, I'm coming from my new warden-assisted home now that I passed my birthday. So I've actually got one of those strings you can pull down when I need a warden. Elliot, do you want to share your screen and let's get on to the meat and potatoes?
Yeah, okay, brilliant. Thank you very much, everyone.
I can see you nodding off.
Mortgage.
My favourite subject. Right, here we go.
Thanks, Elliot. Stay there, Andy. We'll be coming back to you.
Okay, and well, thank you, Chris, and hello, everyone. Good to be back on. Yeah, I'm going to run through our most recent and exciting project in Birmingham, Tyndall Court. This is on the screen, doesn't it? Okay, so this is Tyndall Court, so the Jewellery Quarter. This is effectively the third phase of 2 projects that you've all been involved in. So we started off with Copperworks, Scholars Quarter, and now Tyndall Court is the third phase and the latest release. I'm going to just talk through quite a lot of the general sort of surroundings of the project, why we're excited to be launching this, and talk through what what the feedback we've had so far and what people are sort of generally thinking. So I think the first thing for me, and when we're sort of looking at this particular project, and to be fair, the other 2 phases, is the architecture with it. It's not your generic sort of tower block based in a city centre, which obviously serves a purpose and is fantastic, but it is in keeping with the sort of the local surrounding area. The Jewellery Quarter has many listed buildings, and it is protected in many ways from an architectural perspective. So therefore, anything that is being built has to be in keeping with that. Part of this particular project does have an existing building that is being refurbed, and then the rest surrounding it is to keep in with the sort of local architecture. The red brick, it's not going to be a high rise, it's 3 floors, and and sort of very, you know, from an aesthetics perspective, you know, an attractive building that people like, with the internal courtyards and that sort of thing.
What was it before, Elliot? I'm always interested historically.
So the it was an old car garage on the edge, but sorry, part of the plot was an old car garage, and then it was the existing was old workshops.
Okay.
So it's a bit clearer on the next slide. Look, for those of you that maybe weren't so aware with Scholars Quarter and the Copperworks, where we're based sort of on the edge of the Jewellery Quarter, we're walking distance to the city centre. So it's a prime location within Birmingham city centre, and as you can see just from this graphic here, the walking distance to the likes of Paradise Circus, to Brindley Place, to sort of from the CBD in terms of where we're going to see most of the office blocks and the financial districts. You've got Colmore Row and everything like that. So it's within walking distance to that, but yet in pleasant surroundings, which doesn't have to say the high-rise, taller buildings in that area. Just going with that, and then obviously sort of in terms of sort of communication links and that side of things, you've got your walking distance to New Street Station sort of within 15 minutes.
Elliot, I'm going to interrupt now because we've got Andy on here, and you're a stone's throw, Andy, from this, and so as I call it, bring the cases to court. Independent view. Sorry, Elliot. I hope he's going to say the right thing.
Yeah, absolutely. I was just trying to pick out our office on the picture there, but yeah, we're literally up at Colmore Row, and I can almost see out the window here the development. I drive past this development every morning on the way in, and I've seen it coming out of the ground. And the first phases have been very popular. The Jewellery Quarter, as I'm sure Elliot will go on to say, is one of the premier kind of residential locations in Birmingham, because it's not dead central, and there's a lot of kind of lifestyle and bars and restaurants around there, and you don't feel quite as kind of in the hustle and bustle, but like Elliot said, you're 5 minutes from all the major points from where you'd be working, where you'd be traveling. So absolutely smashing location.
Thanks, Andy. Elliot.
Yeah, that's great.
I gave you a break. You said the right thing.
Slide 6. Sorry.
Yeah, exactly. Yeah. Yes, so the particular project, so it's starting prices from 220,000 for a one bed, and there's 53 units within the block itself. Now, just to give you a bit more detail on where it sits and exactly sort of how it links in with the sort of the other phases. If you can see my cursor in the middle, so this is Copperworks, where my cursor is moving around here in the middle, and then you have Old School House, which is running up on the sort of north west of this picture, and then on the sort of the north or the east side of the picture is Tyndall Court, which you can see here, which is flat roof. The original building that I mentioned earlier is this apex roof that's positioned here, which has apartments within it, 2 floors of apartments in it as well. And then Scholars Quarter is this patch of land that sits just in here as well. So basically, when you're talking, well, any of us are talking about this particular project, and when considering Tyndall is going to be completing in Q4 2024. A sort of question is always about the sort of the background of the developer, whether we're going to have how the process works. Why do we think objects are going to be correct and everything like that? Well, with this particular project, and right from the Copperworks to Scholars Quarter to then Tyndall Court, we're seeing every phase of basically the off-plan purchase. So we have in the middle here, we have the completed units now, so we can see the quality of the finish, the timing of when it was built. We know what rents are being achieved. With Scholars Quarter, we're then seeing the you're then seeing that the process during the build, the process as it's being built. And so therefore we're coming to this completing at the end of this year, and you can see how that's moving along as well. And then we get to the off-plan option saying, well, this is off-plan, I'm going to be completing in 2024, but it's going to follow the exact same structure as the other three. So it's just a nice reassuring, and when you can see it for a client, when you can see it built out like this, I think it really helps sort of paint the picture and gives it a nice storyline with it, really. Really sort of following on from my point earlier and exactly what Andy has just been saying, you know, when we're talking about the Jewellery Quarter being on sort of on the edge of the city, being in this sort of a nicer residential area to live rather than being in the hustle and bustle of the actual city, but with your cafes, bars, restaurants, shops that are all dotted around, you know, nice little squares like St. Paul's Square and things like that. It's a nice environment to live, yet a stone's throw away from city centre. When you know, you compare this to, let's say, London, and you know, if you were able to walk to Goldman Sachs head office from your apartment in London, you'd be looking at paying sort of in the realms of sort of £1 million plus, or if you're doing pound per square foot, £2,000 per square foot plus. Now, when we're looking at this, and this is where it really gets interesting with Birmingham, the growth that we're seeing, and with the city changing from an economic position and more businesses moving in, you know, the Jewellery Quarter is a short walk to all the main office blocks and main sort of CBD and economy driving areas of Birmingham, and yet you're buying one bedrooms at £220,000 or at £460 a square foot. And that, I think that's such a good way of sort of gaining the growth that we can see in Birmingham over this sort of 10-15 year period. You know, I'm not necessarily saying it'll catch up to the London prices, but it will all move up in that sort of steady upward trajectory. And having something in such a nice prime location and a sought after location now, and still has that room to growth, it is actually quite a rare opportunity within the UK, really, in my opinion.
Elliot, I don't think we've ever done a Birmingham show without mentioning HS2.
I was really trying to.
Where does that come in relative terms to the new build?
HS2 is sort of on the other side to the south of Birmingham. So you've got New Street coming in here, and it's going to be coming in around, actually just off this picture. I can't think you can just see it. But it'll be coming in just down in this location here. So south. So it'll probably be, I mean, to HS2, it'll be like a 20-minute, 25-minute walk probably from the Jewellery Quarter down to HS2. New Street's about 15 minutes or so, and so it'll just be on other side of that.
It's not all about sorry, Andy, carry on.
I was just going to say I'd agree with that. It's not too far actually from New Street Station or Grand Central. It's towards Digbeth and Chinese Quarter, so like Elliot said, it's just off the map, but well within a 20-minute walk in the morning.
Yeah, and I think that the thing about HS2, obviously, you know, if you are able to live very close to it and that sort of things, that will have a certain benefit to living in that area. But what it's really doing is driving industry into Birmingham and that connectivity and business. So when you know, as we know, and you've got HSBC, you've got Deutsche Bank, and now with Goldman's and sort of these large stage fintech financial centres that are moving to Birmingham, what HS2 is doing is connecting, but London to Birmingham, and meaning that business and meetings and things like that are far easier to happen. Ultimately, that means more people will work in Birmingham and will need somewhere to live. And then actually they're probably quite likely to want to live in the Jewellery Quarter, which is actually close to walk to their offices and things like that. So the benefit of HS2 is obviously huge, but it's just and it's still only a 15-20 minute walk. I mean, and that's the thing that we all suddenly forget about Birmingham, and you sort of, and lots of us will look at London and as the sort of capital and that side of things, but Birmingham, you know, you can walk a lot of places within Birmingham city centre, and that's the beauty of the city as well, is that everything is in walking distance. You can gain areas of the city with real relative ease, so the city centre, and which is part of its charm as well. So I think that's a real something to always consider. Actually, is walking distance is a pretty good thing within the city.
Elliot, you mentioned prices from 220. Can you put a little bit more meat on the bone on that one?
Yeah, I'm literally, that's my next. Sorry, we just.
Oh no, I'm trying to move you on.
Sorry. Right, so I think, as Chris has just pointed out, I think what we're obviously a major factor to all of this is the financial setup and what prices we're looking at, what returns we're going to get, and so I've just sort of used. I've got a cash flow here. It's for the same property. It's actually, you can't see in the left-hand corner, but it's for 225,000 for a one-bedroom. Now, I just wanted to sort of highlight where we are in terms of figures from a sort of your traditional 12-month let. Now, again, and I'm going to go on to this in a little bit more detail, but as I mentioned previously, the Copperworks is completed. So we know today what rents are being achieved in the Copperworks, and we can put those into our figures now. These aren't forward projections. These are what real rental figures are happening. And then we can work off that basis. We also have the short-term let, which are figures that's been brought in by our sort of short let property partner, my property host. And it just, what's reassuring about these figures, as I say, this is real time. So for this particular unit, which is similar to one in Copperworks, it's achieving in the smaller ones sort of 950 to 1,100 is what we're achieving for a one-bedroom. So at this one particular, we feel will be around 1,050. When we're looking at, and in this instance, we're sort of looking at an interest only, say with a 5% interest rate. Again, I think that's, Darren may tell me otherwise, but 5% should be okay. I know it's dependent on people's criteria, but for the sake of this example. Anyway, so your net cash position on this sort of property at 70% LTV is about £203 a month.
Elliot, you just take LTV, and I'm so aware of using abbreviations. And Linda's just pointed out you used the expression CBD. We just used LTV, loan to value, from the mortgage side of things. CBD, can you explain? Central business.
Yes.
Yeah. Central Business District, that's what CBD is. Sorry, Elliot, I just like to answer these things as we go along. I hate anyone.
Yeah, no problem. And the return on investment for the ROI for these
ROI.
Yeah.
It's another one.
Anyway, these are examples. We're looking at 60% after 5 years and 156% after 10 years. That's with a total investment from the client of £77,000. That's on a standard 12-month AST. As we're all aware,
AST,
assured short hold tenancy.
Okay, and I can see Andy smiling there. And I'm just going to give you an AST compared to what I call, I don't know if there's a better expression, Airbnb style. You've got the Airbnb style on this, haven't you?
Yeah, correct. So what's unique about this particular set of developments, and when I say unique, I mean this, generally speaking, or historically speaking, new build apartment blocks within their lease agreements would have a sort of a blockage, for want of a better word, on short-term Airbnb style lets. Not everyone, but majority. With this particular project, across all three phases, that is being allowed. So within the lease, you are able to have short lets. We've taken advice from a third party in terms of who are specialised in the short let business, and so the figures that we've got at the bottom right hand screen are for the short let option. So what is, again, a client, what is nice about this is the flexibility. You could have your traditional 12-month tenancy agreement, or you could look at the short let options, which do return, which returns are significantly higher, but obviously also come with risk as well, because we're looking, what we're talking about is people taking it for 1, 2, 3 nights a week and trying to keep that occupancy rate high and everything like that. So in this example, and we can, and you know, if we wanted to speak about this in more detail later, we can obviously always do that. We're using an occupancy, which the third party, my property host that we work with, are confident they will be able to achieve an 80% occupancy over a year, okay, which will be an average occupancy per night of £98.
I'm going to just say one thing. I don't know if it's just me, but on my screen, the left-hand side is all blue.
Yeah, I'm trying to focus on the right-hand side because the left-hand side is not relevant, but it's not.
Oh, okay. Okay. Sorry, just making sure it's not just me.
Yeah, no. So on the right-hand side, so we're looking at a monthly income if the place is occupied 80% of that month of £2,385. Now there are, because it's a short let, and obviously people are moving in and out, so you're having it professionally cleaned, bed linen, towels, toiletries, and all the things that go with effectively small hotel rooms. The charges are higher. The client would also need to, or you as an individual would need to pay the council tax and the utilities, which in a 12-month agreement the tenant would always do. So the associated fees are higher, but you would net about £1,272 a month, and then after mortgage costs, you're looking at netting £616 a month. And then just in terms of return on investment over that year, over the same period of time, 5 and 10 years, we're looking at 112% over 5 years and 270% over 10 years. Same cash invested, £777,000, and those are the two figures with obviously the risks and rewards of either or. I've sort of rushed through this really, but I just wanted to give you a bit of colour on the investment case and why it's put forward, and obviously we talked about the project in itself. But as I mentioned, I think what's always important is actually looking at why we feel that these sort of things are achievable. And as I say, and I keep on saying, I've said it all the way through this sort of presentation about the Copperworks, and it's real time, it's completed, its tenants are moving in, we know what rents are being achieved, we know the quality, we know how well received it's been within Birmingham, and the tenants are moving in and enjoying the surroundings and the build that's been done. Just
to let everyone know, this is being recorded, and it will be on our website. And please let us know if you want the slides. Somebody should send me already. They've said they want Tyndall Court, so that will all be available. Thank you. Sorry, Elliot, I thought I'd give you a rest. Yeah. What's that one then?
No problem. So this is Scholars Quarter. So this is the second phase. There are 100 units within this project. That sold, when I say sold out, we sold our overseas quota on before Christmas. I think there's before Christmas. So again, really well received, really well sold, particularly well. A lot of people liked it. You can see the quality and the speed of the construction. You've got the Copperworks to use as your sort of running example, and this is the next phase of it. Again, when you're talking to any client that's saying, oh, it's this particular project at the moment is a brown piece of land and it's going to be completed in 2024, then you can say, well, here's Scholars Quarter, this is what it'll look like in a year's time. Here's Copperworks, here's what it's going to look like in 2 years' time. So, and each stage, and you've got the figures and everything else here to sort of understand things like the ground rent, service charge. There'll be no ground rent. It'll be a 999-year lease. Service charge will be £1.60 a square foot, and it just gives it all it just ties it all up very nicely together.
Thank you, Elliot.
And finally, I'd just like to talk about the developer. So it's King Crescent Homes, who we've worked with on a number of projects over the last 3 or 4 years, and they have now, with that track record, and again, you can see it in real time, you can touch it, feel it, and see what they produce within Birmingham itself. It's nice to just remember that, and again, when we're looking at these projects, understanding who's building it, as Andy sort of points out right at the beginning, they're there to do the DD, and from a Holborn perspective and from Centric's perspective, and a developer like King Crescent Homes, where you can see their past performance, you can see where funding's coming in, the quality of their product and everything else like that. It's a nice reassuring element to the whole process. And when you're looking at buying investment properties, working with the right partners is so important. And King Crescent Homes, as a developer, very much are that. Same developer
as Brighton.
Same developer as Goldstone, yeah,
which is also on our website. I've got a question, Andy, just come in from John Parker. When it comes to your service letting and management, and you haven't discussed these, but I'm thinking up in this part of the world, it's probably about 10%. Am I right in thinking that? About 10?
Almost. It'd be around 12% of a managed rent. Okay.
And John Parker says, what do you actually do? And I thought that's such a great question, because nobody's ever asked before. What do you actually do for the owner, for the...
Sorry, I missed the first part. What do we do?
What do you actually do? So you look after anything that goes wrong, you make sure the rent's coming in, you make sure it goes...
It's a full hands-off service. So we're used to dealing with international investors. So right the way from, we can actually take the handover of the unit from the developer for them. So they don't need to come here to snag it, to furnish it. We then advertise it, get a tenant lined up. We reference the tenants, make sure you're getting the right quality tenants in the property. We protect that tenancy for you as well. We then collect the rent month in, month out. But during that period, if there are any maintenance issues, whether it's under warranty or not, we will liaise with warranty provider or our contractor base that we deal with and resolve those problems as quickly as possible. So again, the investor hasn't got the tenants contacting them saying they've got a leaky tap. They'll never speak to the tenant.
So somebody's actually asked, therefore, if they had a portfolio and they want to put it all under one roof, would there be a sort of discount or whatever, somebody who had bulk with you?
Yeah, we'd always look. I mean, we're flexible. We're a very kind of nimble and dynamic business. So if the case warrants it, then absolutely we can discuss some discounts for bulk investments. Absolutely.
Thanks, Andy. A question's coming from Lee. Do Centric help with setting up limited liability companies for investors?
We don't, but again, we've got many legal contacts.
And of course, we have got an association with Get Ground, who I'm sure all of you probably know, that we do. So Lee, if you need anything, just come back to me. Darren, on the mortgage front, are we talking about the famous 65% up to 70, or where are we at the moment?
Yeah,
subject to status. Subject to status.
I love that state. Yeah, 65-70%, like Elliot was mentioning, but subject to obviously client situation and affordability and everything else. Yeah. So, but yeah, this and something that I know you and I have had conversations with over the last week with some of the wealth managers is on the figures that Elliot mentioned. It obviously mentions 20% down on exchange, 80% left on completion. The 80%, just to reiterate, isn't an 80% mortgage. It's literally 65 to 70% mortgage, and the rest of it comes from the client. So I just want to reiterate that, because we've had a couple of conversations with a couple of clients where they're just a bit unsure about the situation. It's not the easiest of conversations to have with a client when they think they've got 80% mortgages, and I tell them they've only got 65. So just be very wary that 20% on exchange, like Elliot mentioned, and then 65 or 70% on.
I'm going to ask a question, because I do actually have a history of mortgages, as you know. Now, does a client have to have a job?
The simple answer to that is yes.
Yeah. Okay.
Especially if they're international ones. But yeah.
And you mentioned earlier on when you were talking about stress testing, and let's just do in 20 seconds how they go about stress testing.
Okay, yeah, and obviously that's probably a question that Linda was probably getting to, is maybe all this jargon and stuff. Is the stress testing for lenders. they look at the annual rent achievable. They then divide that figure then by anywhere between 125 and 140%. And then they divide that figure by either the interest rate they're getting on a 5-year deal, or 2% more than the deal would be on a tracker rate or on a discounted rate. So actually, you can see some of the fixed rates will actually produce a higher loan. So that works out annual rent divided by between 125 and 140% at anywhere between 5% to say 6%, 8% potentially, and that will then give you the total loan. So that's part of the due diligence that we do, is making sure when we're providing options for the client, we've actually looked at all that. We've looked at the stress testing. So when we're providing quotations and options for client, it's not just, oh yeah, this lender will do it and that lender will do it and this lender, and then worry about it later. We would have done all that information. So a client was asking me yesterday, why I've only got one option? Well, because there's only one option will actually lend you enough money to purchase the property he's looking to purchase, not these ones. But once I explained that, he was right, just get on and do it. So
yeah. Okay, thanks.
Actually, so I just got a question on the mortgages. Sorry, just talking of options available. Do you, and you did sort of touch on this earlier, but do you think there'll be more and more products coming up? I know rates are changing, but do you think more and more products will follow, or do you think just rates will change with the same products on the market?
I think the rates haven't changed, and I've done this job since God was a boy for 24 years, so before Chris was even in it. But the normal rates would be a fixed rate, so you know how much the payments are going to be for a set period of time, so you haven't got to worry about it. Discounted rates, so it'll be the variable rate minus a certain percentage, and then you've got Bank of England base rate trackers, which will basically just, if the Bank of England base rate goes up or goes down, it will be a certain percentage above. I don't see any other type of deals coming around. Gone.
Okay.
I think gone are the days where there's and when I first started, I used to have things called capped and collared, so it'll never go above a certain figure and never go below, so it'll just float between. That's just too complicated for these silly lenders, really. They just want to keep it simple, nice and clean. The clients want to know and understand what they're doing without it fluctuating up and down. But yeah, they're the three main ones.
Okay. I always say this every week. Please excuse me for saying it again. Always reach out to Darren. When you're thinking about doing what you're doing, just reach out and quick application form, and he can give you peace of mind. It's called a decision in principle, a DIP. There we are, DIP, decision in principle, and he can give you peace of mind. So always reach out for that. I've got Meals on Wheels coming in a minute.
Sorry, Chris. It isn't just me. It's like they've got Elliot. They all know that it's me and Karen and Emma and Max and Donna. Right, yeah. So actually, I'm the ugly face of this. And Karen and Donna are the better ones. But actually, it's not just me. So don't worry that if you think I can't cope with all these influx of applications, if I can't deal with it, I'll pass it on to one of the other people. So there's a massive team behind me. Thank you, Darren. As I said, I've got Meals on Wheels coming because I qualify now at my new age. Your carer's coming in. So the carer's coming in to change my trousers. Anyway. Andy, anything else you want to add? And thank you, by the way.
No, thanks for inviting us to the first webinar. Really excited to be a part of it. And if anybody needs any boots on the ground advice, I'm happy to walk down the road, take videos, send them to people, do web calls, whatever needed, just to give people a bit of confidence. That's fine. And obviously I can liaise with Elliot on that as well. Thank you very much. Thanks, Darren. Invaluable as always. Elliot? Yeah, thank you.
No, thank you. No, this is me saying goodbye to you. No, nothing else. But you have got Brighton and you've got other stuff. I know that. Reach out. And also the rest of the team as well, is what I was going to say as well. Oh. So don't forget, we're all part of a team. Yeah, I'm part of a team as well. So thank you, everybody. Lots of these webinars are on our website, which is Holborn Property Investments. So please have a look at that with the recordings and all the details of all the properties that we've got. So that's it. Thank you very much to Vincent for organising, and see you again next week. Now, what have we got next week? Oh, we've got something really good lined up for next week. Please tune in. All right. Thank you, everybody. Thanks.